That I want to share with you what's been taking place in Washington over the recent past, how that's shaping the discussions that are going on right now, but then just as importantly, share with you where we believe that's leading us at this time. But in order to do that, I really need to take a small step back and do a quick post-mortem on the election. Now, I know Andy spoke to this audience last year, and if any of you happened to see me present last year, you know we are unwavering in our opinion that President Obama would win re-election. We just never saw that Governor Romney had a serious chance of winning the election at the Electoral College level. Now, perhaps at the popular vote, but from an Electoral College perspective, it was always very clear to us that President Obama would win a second term. What we also predicted was that the House would stay in the control of the Republicans, albeit a narrower majority. And again, that's exactly what happened. Now, most pundits stop their analysis at that point and say this is a status quo election, that we, collectively, the electorate in the United States, we weren't sending a message to Washington with our votes this year. And that's where I respectfully disagree with most pundits. And what I can show you as the tell, to use a gambling metaphor, was the Senate elections. How many of you or how many pundits really thought the Democrats were going to pick up seats within the Senate elections? Quite honestly, not really anyone. And that to me was the tell that there's something more in the data. And so when we started looking around at why did the Republicans do so well in the House but do so poorly in the Senate elections, what we found is the reason the Republicans maintained such a majority within the House was primarily due to the redistricting efforts that were completed back in 2011. So literally, as a country, we redrew those congressional districts. The net result of that redistricting effort was that red districts became more red, blue districts became more blue. But bottom line, at the end of the day, net, it favored the Republicans slightly. And that's why they had such a good return in the House. Now, interestingly, then we have to ask ourselves, if truly the electorate was saying that Democrats had a more broadly universal message that resonated with the electorate, then why aren't the Republicans coming to the president and saying, Mr. President, what can we do together in this second term? What can we work together on in a bipartisan way? Well, that's a different cut of the data. And David Wasserman has done some great work on this. He found of the 234 Republicans that won the seat in the House of Representatives, only 15 of them actually sit in districts that President Obama won. Now, historically speaking, that's a ridiculously small number of seats. Compare that with the 2010 elections. There were 63 Republicans that were sitting in districts that President Obama won. So that tells us right there that the Republicans in the House, at least, are saying, why should we cooperate with the president? We have every expectation that we can maintain this majority going forward based on the redistricting effort. We can also look at the Senate elections in 2014. There are 14 Republican senators up for re-election in 2014 in 13 different states. And of those 13 states, President Obama only carried one of them. So again, just further proof that why the Republicans don't feel any need to cooperate with President Obama. They feel every bit of confidence that they'll do just fine in these 2014 elections. So if you understand that as the lens of that 2012 election, now we can look at the fiscal cliff deal. And I like to look at the fiscal cliff deal in terms of what it does, but just as importantly, what it does not do. Well, what it does, first of all, is made permanent the marginal tax brackets for 99% of our country. If you or in your family earn $450,000 or less, you will see no changes to your marginal tax rates with this tax change starting January 1. What it also made permanent was the estate tax code. It extended the current $5.12 million and indexed that for inflation. The 2013 estate tax limit is now $5.25 million. But more importantly, or as importantly, it maintained the relationship between the estate tax limit and the generation skipping tax and the gift tax limit. So it still allows anyone to gift that $5.25 million to anyone of their choosing, free of any tax exposure. Now, what it also did was maintain portability amongst spouses. And interestingly, as I travel around, I still get a lot of confusion as to what this estate tax portability really means. So let me explain real quickly. If I die today, I can pass along $5.25 million to my children. Let's just say that I only pass along $3.25 million, not using $2 million of my unified credit. My wife then gets to inherit that $2 million of my unused unified credit and add it to hers. So if she passed away later this year, not only would she be able to give away her $5.25 million, but she would also be able to pass along my unused $2 million. So for a total of $7.25 million. That ability to transfer that unused portion of my estate tax limit is called portability as it relates to the estate tax code. Now, it did also increase the estate tax rate from the current 35% in 2012 to 40% in 2013. Now, what it also did, though, was permanently patch the AMT, the alternative minimum tax. As you know, there was no patch passed. That's hard to say, isn't it? There was no patch passed in the year 2012. So there were a lot of people that were going to get a pretty rude awakening in 2013 when they went to file their federal tax returns. So the fiscal cliff deal, what did it do? It simply patched the 2012 AMT, but made it permanent and indexed for inflation. So as financial planners and financial advisors, we don't need to worry about the advice and guidance we're giving our clients around the AMT. It's permanently patched. Now, by my account, I've used the word permanent 3 times as it relates to the tax code. So I probably ought to define that for you. As we're relating and talking about the permanent nature of the U.S. tax code, that literally means for the next 2 months. Now, sadly, that's not a joke line. I'm serious. It's for the next 2 months. The term permanent only means that there's not a specific sunset date for those changes. So that's all that word permanent means. It does not mean that it can't be changed tomorrow. So understanding that, let's also talk about what else the fiscal cliff agreement did. Well, it reinstated the PEACE and PEP aspects of the income tax code. The net effect of that is it decreases the value of itemized deductions for our more well-off clients. And by most accounts, most people say it adds about a 1% rate or 1% to the effective tax rates that wealthy clients pay. In addition to that, it also extended the ability to do direct transfers for clients who are 70 and a half directly from their IRA to a charity of their choice, up to amount of $100,000. So we still have that ability in 2013 to do that fund planning with a client who's philanthropically inclined to transfer from their IRA. In addition to that, the Democrats got a win by extending the enhanced unemployment benefits through year 2013. But the Republicans got a win also. They got a win by extending or delaying the implementation of the budget sequestration spending cuts that were supposed to go into play January 1. And I'll explain why in a minute, why that was a win for the Republicans. Now, but let's talk about what it does not do. What the fiscal cliff agreement did not do was delay the implementation of the 3.8% health care reform tax. To the extent that you or your wealthier clients who earn $250,000 or more have taxable investment income, any taxable investment income above that $250,000 is subject to this new 3.8% tax above their current tax liability. The IRS sent out a circular in early January that told all of our tax professionals that they need to, for our quarterly estimated taxes, start accounting for this 3.8% tax on investment income. What it also did not do was extend the current 4.2% tax we were paying on payroll taxes. We've now gone back to the statutory 6.2% on the employee portion of the payroll tax. Now, sadly, what it also did not do was decrease government spending by $1. It did not increase the percentage of Americans actually paying income taxes. As you know, only about 53% of our population actually pays federal income taxes. Not that the 47% don't pay other taxes. They absolutely do. But federal income taxes are paid by roughly about 53% of our population. And the worst thing of all is that it did not decrease short-term uncertainty in a political environment.